Dan McTeague is back with us, and Dan is now the president of Canadians for Affordable Energy. Good morning. Welcome back. Boy, do we need to hear from you today.
Thank you, Heather. I hope it's not bad news.
No, I was going to say I'm going to let you be the bearer of bad news, Dan, for anybody who has not yet tuned in. How bad is it across the country today?
Well, we are at record levels pretty much across the entire country, with the exception of the prairies, especially Alberta, which dropped gas taxes 13 cents a litre. But pretty much everywhere else, no solace. We are looking at all-time record prices, $1.95.9 at many stations in Toronto, $2.02 for Montreal. We mentioned Newfoundland earlier at $2.04, heading possibly to $2.10 on the weekend. Of course, Vancouver, $2.17. All of these prices, by the way, will be going up another penny tomorrow. And by the looks of it, where the markets are going today, Sunday, could see another 2-cent increase. So the average in Canada is going to get a lot closer to that $2 litre psychological barrier, if you will, and it's not likely to end there anytime soon.
No, happy Mother's Day. And that is for regular. We should remind people, anybody who needs premium, that's regular pricing, right, Dan?
That's regular, yeah, with diesel in Canada.
It's a super simple question, but it leads to a very complicated answer. Why is this happening?
Tightness in supply of oil, tightness in supply of diesel, and causing tightness in supply in gasoline. Putin's war has not helped, but the fact of the matter is that the global economy is emerging from 2.5 years of slowdowns, of COVID-related slowdowns. This period of catch-up and dislocation is putting in greater pressure on a supply, on a product that has not been as made to meet this demand. Much of it to do with years and years of this idea that we could somehow wish away oil and gas has now begun to bear fruit. And unfortunately, it's a very bitter harvest for most Canadians, whether you happen to be a driver, whether you happen to be a farmer, or you happen to be in the mining, lumber, any industry, or jet airlines industry. All industries are experiencing significant, almost impossible increases year over year. If you look at gasoline this time last year, some 70 cents a litre cheaper. You look at diesel, has doubled in prices. That's the workhorse of the global economy, and it's very true here in Canada. The consequences of this, of course, are extraordinarily far-reaching, not just for policymakers, but for consumers for the long term.
For the long term, so it's not going down anytime soon. So diesel, you said, tied in, given what equipment diesel fuels. How is this? I mean, you can see when you listen to your explanation how it's all fitting in with the inflationary pressure, but how is it tying in for people? How is it linked to potential talk of recession?
Well, look, everyone who says I don't drive a vehicle that uses gasoline, I drive, an efficient vehicle, or I take public transit. Nevertheless, diesel is everywhere. The truck to transport your Nissan Leaf to their dealership, to the products that you take for granted, everything from the nitrogen to the urea used for seeding for farmers, all the way to the transportation, the processing. Between natural gas and oil, we have a circumstance here of this heightened superinflation, this, call it what it is, an energy bubble, which really is wrapped in what is an energy crisis, now beginning to hit consumers globally in a way that could very well trigger a global recession. I think this is a great fear. It's not the short-term inflation, but the long-term inflation. No one has any quick answers. And of course, countries that could step up to the plate with additional spare barrels of oil and capacity are no longer in a position to do that. Canada being the most notable one, the third largest reserves in the world. But we spent a considerable amount of time and discourse in this country shutting down pipelines. And as a result, Mr. Putin and others who have oil are able to hold us literally over the proverbial barrel of diesel or oil.
Okay, a couple of things you've raised I want to make sure I touch on. Russia, since you mentioned it a couple of times, it looks like the EU nations are getting close to a deal, perhaps as early as today. They've talked about by the end of this week that would ban oil imports, Russian oil imports, by the end of this year. Now, what further impact, I guess, would that have?
A further tightening of supply. So oil would probably shoot up to $125 a barrel. It's testing 110, 111 this morning. And of course, it would mean here in Canada an additional 15 to 20 cents a liter on what you're purchasing today. Diesel would also go up as a corollary. The fact is that any decision made by Europe to wean itself off dramatically from where it has gone and spent the past 30 years will have enormous implications for the world. OPEC is not coming to our rescue. The Americans, ironically, who used to produce 13.1 million barrels a day, are down to 11.4 million barrels. Canada doesn't, as I mentioned earlier, have the infrastructure to be able to deliver to the world what it desperately needs, even though it has the product. So we're in a very, very tight bind. It's about to get worse, and it will be very much the summer of our discontent, to say the least.
We're talking at the same time, Dan, on this program, reporting it just the other day about record oil company profits. How much is that a contributing factor?
The profits are there because companies are not able to reinvest. We're not replacing the spare barrels of oil. When we go and fill up our gas tanks, it's quite likely that we're losing the capacity to explore, to look for new opportunities to replace the barrels that we're using today. What's happened is that regulations, green energy, like it or not, and our fixation with only one issue has led to a circumstance where we're actually making not just green companies very rich with subsidies, we're also making oil companies very rich. This is not helping consumers. And sooner or later, I think our friends and policymakers in Ottawa are going to have to start to think and figure out what's important for our economies, how the ordinary average individual is going to make ends meet, because this inflationary spiral caused by a lack of energy affordability is going to do significant damage to the Canadian economy, possibly tilt us into a recession in the not too distant future.
So when you mention the consumers, help us with all of this. You mentioned electric vehicles, some looking to convert to that, but what is your best advice at this point for getting the most out of your tank with prices as high as they are?
Always buy in the evening, buy in the weekends when you can. When Elon Musk says we need to make more oil because he knows full well the cost of EVs are going up as a result, no EV can be possible without oil or gas. I think what it really says is that we have to sort of find a way as consumers to remind our elected officials, especially those in Ottawa, who seem to be doubling down on regulations and tightening our oil supply at a time in which countries like Poland are asking Canada for more oil, more gas. We have found more trendy ways to say no. And I think reality is starting to bite. We have competitive issues. Most important, energy security and global security, I think, are paramount, and they tend to be the ones that trump all other issues.